Hey everyone, in this video we're going over Lucid's delivery numbers and production numbers that are out, and it's bad. Personally, I'm staying away from this company and I'm going to tell you exactly why. But before we get into it, if you could smash the like button and subscribe. Now let's get into it. Lucid stock is down over 10% today, trading at $7.24 at the time of this recording. And it still has a large market cap of around $16 billion. Now, the reason the stock is down is they released their production and delivery numbers for Q2. So Q1, the last quarter, they had delivered 1,406 vehicles. Well, this quarter, a quarter later, they've delivered 1,404 vehicles, so 2 vehicles less. This is a huge upset because they decreased deliveries quarter over quarter, and they have to be ramping them to meet their guidance. Now, when looking at them versus another electric maker like Rivian, we know Rivian in Q1 delivered 7,946 vehicles, and more recently in Q2 delivered 12,640 vehicles, a huge increase quarter over quarter. So looking at Lucid in comparison to other early EV makers like Rivian, it's a huge disappointment. Lucid is going to have to work extremely hard to scale, and they're not showing us that they have the ability to execute on that. Now, personally, I've never really believed in Lucid to deliver. I haven't believed in the company. I thought their market cap was too high for a long time. I still even don't really believe they can execute, so even with a lower market cap, I'm not that intrigued in them. And one of the key reasons is I just don't believe in the founder, Peter Rawlinson. Elon spoke about him many times in the past about being extremely negative on him when he was at Tesla, that he basically couldn't hack it or something like that. He doesn't sound confident in his interviews when I watch them, and he should be all focused on scaling, but instead we're seeing things like Lucid supplying Aston Martin with motors. To me, that's just a distraction and shows me lack of confidence in their own ability to scale and needing their supplies for themselves. I mean, would Tesla or Rivian ever supply their motors to another company while they're trying to ramp their production in-house? I can see them doing it when they're scaled and have oversupply, but when you're just making 1,000 or so cars, it just seems like a huge distraction and kind of, to be honest, like fluff for investors, something that could excite investors. And that's kind of what I get from Lucid, is trying to wow investors with like new funding from the Saudis and this partnership with Aston Martin. But are they executing? And that's the fundamental problem. Now, fundamentally, if we want to just talk about the stock and its value, it's extremely hard to discuss valuation because they don't make any money. So sure, we can say the same thing about Rivian. We could say it about Tesla in the early days. But unlike them, Lucid just doesn't have a clear path to me to produce hundreds of thousands or millions of vehicles. And that's what it takes to really have the scale to be profitable in this business. You need to get to those levels. And if they don't get to those levels and just want to be a niche, very low volume, expensive vehicle, I just don't believe they'll be able to justify the market cap they currently have even. And they guided in 2023 to production of 10 to 14,000. We're halfway through that year. They produced basically 4,487 vehicles in, 6 months. So they're not on track. Now, obviously they could ramp, but the thing is they've shown quarter over quarter they're not making progress to higher production. They actually did slightly less production in Q2 over Q1. So with this update today that production has dropped slightly, deliveries have dropped slightly, I just don't think they might even hit the low end of their guidance from 10 to 14,000. Then we see that Lucid just continues to sell stock to keep their business going. Now, this is typical in early stages, and I understand it, but unless we can see a clear progress towards a sustainable, profitable future for all investors, the only thing we'll be able to count on is future dilution and consistent dilution. So I stayed away from Rivian for a long time for the same reason, plus that Rivian just had way too high of a market cap when it wasn't at the stage that it deserved that market cap. Now, recently, I've taken a large position in Rivian, and it's only because I see their ramp is finally happening and I see a path towards profitability. And when I listen to the management speak, I believe they are actually executing on the correct path and vision. With Lucid, I just don't see those things, unfortunately. And this kind of goes across their business. I mean, we even see Lucid giving up control of the operating system, in my opinion, the moment they added CarPlay. It's obvious to me why Tesla and Rivian didn't take the easy path to just add CarPlay and Android Auto. I mean, obviously customers want it, but there's a reason they don't give it to them. It's because they know how important it is to control the operating system and the software and run the stack. They don't want to give that experience over and give it to Apple and Google and have the users now kind of just being used to using CarPlay or Android Auto when they know they can make the software better and continuously update it and be in control of it. But Lucid took the easy path and just put in Apple CarPlay and I believe Android Auto. Now, many are going to argue and just say people are asking for this, that's why they're doing it. But in my opinion, if the management was confident in their own ability to produce great software and user experience and continuously update it, they wouldn't have done this. So it's just another point that shows me a lack of confidence in their own abilities. We've even recently seen GM is ditching CarPlay. They even realize how important it is to control the entire stack. And they added CarPlay at first, and now they're ditching it. And for all these reasons, but especially today when the production delivery numbers have come out, the stock is down. And personally, it being down, in my opinion, is not a buying opportunity. And that's why I wanted to make this video, is it's easy to see it come down a lot. And if you don't really know or do the research, it's easy to think it's a great buying opportunity. And if you really believe in the company and the management, then it very well may be. But in my opinion, even at these prices, it's not a buying opportunity. And to anyone that's going to mention that they have backing by the Saudis, etc., my reply is simple. Unless the Saudis completely backstop this company and are willing to take them private and just save them regardless of execution, then having backing by any individual investor or company or anything or government, it's not really that important. Because at the end of the day, the fundamentals are going to control everything. Years down the road, if they don't execute and they don't continue to progress this company forward in a meaningful way, the stock will reflect that, and they will go out of business at some point or another if they can't turn things around. It's as simple as that, to be honest. And nobody's going to back the company forever. They may buy them out if they get cheap enough, but I don't want to sit around and find out. Now, if you made it to the end, please like this video and subscribe. And if you'd like to see me do a video or analysis on any other stock, comment the stock below and let me know. Thanks for watching.